Hashtag CryptoSenius, the $68 billion move. Two of the UK's biggest institutional money managers just moved over $68 billion onto a blockchain network. Quietly. No press conference. No tweets. Just one of the largest single migrations of institutional capital into crypto infrastructure in history. And almost nobody noticed. This is CryptoSenius, and this changes everything about how you should be thinking about your portfolio right now. Here's what happened. Legal & General, one of Britain's largest asset managers with over $1 trillion under management, along with another UK heavyweight, partnered with Calistone to move their combined funds onto a tokenized settlement network. We're talking $68 billion in institutional assets on blockchain, live, right now. For context, this isn't some startup experiment. Calistone operates the infrastructure that processes fund trades for over 1,000 financial institutions globally. It's the plumbing of institutional finance. And that plumbing just went digital, went decentralized, went blockchain native. Why does this matter in this exact moment? Because for the last decade, Wall Street said crypto wasn't ready for institutional money. Too risky, too unproven, too regulatory gray. Yet here we are watching mega fund managers move $68 billion on a tokenized networks. The narrative just collapsed. Let's dig into what's actually happening here, because the angle everyone's missing is the speed component. This isn't a pilot. This isn't a proof of concept that takes 3 years. This is a major deployment. Institutional money managers don't move $68 billion into an infrastructure unless they've already done the stress testing, the legal reviews, the security audits. This decision was made in corporate boardrooms months ago. The announcement just happened this week. What Calistone is enabling is radical efficiency. Traditional fund settlement takes days. Multiple intermediaries, manual reconciliation, cost basis tracking spread across different systems. Tokenized settlement does it instantly. Full transparency. No counterparty risk. Lower fees. This is why they're moving the money. The second thing everyone's missing is the competitive pressure angle. If Legal & General is moving $68 billion on a blockchain infrastructure, every other mega fund manager is watching and calculating. Can they afford not to follow? Because once one player moves this volume and demonstrates the operational benefits, the others can't stay on legacy systems. There'll be a cost disadvantage. This becomes a cascade. Here's what this actually means for your portfolio. First, institutional adoption of crypto infrastructure is no longer theoretical. It's happening at scale right now. That changes risk calculations for every crypto infrastructure play. Companies building settlement layers, custody solutions, compliance tools, all of these benefit directly from $68 billion of institutional capital now operating on their networks. Second, this validates tokenized finance as a category. If you thought crypto was just speculation and digital assets, you're looking at this wrong. This is about how financial infrastructure itself gets rebuilt. That's a multi-trillion-dollar opportunity over the next decade. Third, regulatory clarity just got stronger. You don't move $68 billion of institutional capital into any system without serious conversations with regulators. The fact that this happened means UK financial authorities are comfortable with it. That sets a template for other jurisdictions. The real story isn't that crypto is going mainstream. The real story is that blockchain infrastructure is becoming the backbone of institutional finance. And $68 billion just moved from the old world to the new one. Subscribe to CryptoSenius for daily financial intelligence on the moves that actually matter.